Hi everybody, I'm Michael Reinking coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, this is for informational purposes only, and the NYSE does not recommend any investments or investment strategies. So as the invasion of Ukraine stretches into the third week, the volatility we're seeing across financial markets remains pretty extraordinary. At this point, we've become pretty accustomed to 2 to 3% moves on a daily basis in US indices, and over in Europe, the moves are 1.5 to 2 times that on a daily basis. Now, the big story this week was the US ban on Russian energy, and we saw equity markets move sharply lower on Monday. Oil prices briefly traded above $130 a barrel on Sunday evening as futures reopened. Now, yesterday we did see a pretty big counter trend move in a lot of the safe haven assets, as there were some hopes ahead of today's foreign minister meeting in Turkey. We saw US equity markets rally about 2.5%. Oil prices were off over 10% as there were also some hopes of an OPEC supply response. However, last night's meetings didn't really yield too much in the way of progress. And as such, we're now looking at equity markets giving up, a little over half of yesterday's gains were around session lows mid-morning. Oil prices had bounced about 5% overnight, but we've backed off with ICE Brent right around $113 a barrel. Now, the other big move this week has been in global yields, which have moved sharply higher. This morning, the ECB left their rates unchanged. They did tweak some of their asset purchase programs. And in the press conference, Christine Lagarde did highlight the near-term economic risk and inflationary pressures given the current situation, but tried to maintain a lot of flexibility in the path of monetary policy going forward. Now, at this point, we're looking at U.S. yields that have completely reversed the move that we've seen over the last 2 weeks. The U.S. 10-year is around 2% again. The 2-year yield is actually hitting new highs for the year, right around 1.72%, which leads us into the big catalyst for next week, the FOMC policy decision on Wednesday. Now, keep an eye out for our Fed preview on Tuesday evening. And then the other big event next week is options expiration and the quarterly index rebalances on Friday. That could add to some of the volatility that we're seeing in markets, and I would expect Friday to be one of the heaviest volume days of the year. Well, that's going to do it for this week. Thank you for joining me. I'm Michael Reinking, and this has been your Weekly Brief.